Welcome to Monday's Market Outlook here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist at WCI. And very interesting events going on around the world besides, obviously, the U.S. hockey team not even getting a medal. But, with all the shine around Sochi and Vladimir Putin and, hey, pulling off a great Olympics, this is absolutely a smack in his face. Losing the Ukraine with the president essentially fleeing, and they wouldn't let him leave the country. I'll bet you he gets arrested, and they probably put him on trial for war crimes. This is a big deal, folks. This was a old Cold War Soviet-U.S. style fight. With the people of the Ukraine wanting freedom and the heavies wanting the lifestyle of the former Soviet Union, right? And unlike the old days, the Soviet Union lost, right? But this ain't over. Okay, Putin has shown himself to be pretty resilient, whether it's with Syria or look at what he did in Georgia. So I'm going to be keeping an eye on this pretty tightly, but very interesting events in the Ukraine. This week, folks, operationally, we're going to see a lot of economic data. As I talked about in my Friday market wrap-up, I think the data last week really confirmed that we're back in bizarro market. Bad news was good news for the market for the past couple weeks. We've seen this rip your face off rally, essentially, after this really volatile January. Boom, this is what we've seen in February. It looks like we might be running out of some airspeed here at about the 1850, 1840 line on the S&P. So it'll be interesting to see if we get through that and if bad news does in fact stay good news this week. On Monday, we're going to get Flash Services PMI. On Tuesday, we're going to get a lot of housing data. And we got a lot of housing data last week. And I got to be honest with you, folks. Take a look at this chart. The National Association of Home Builders. This is their index, right? And they've always been enthused, right? They're always enthused, always enthused. Well, look at the black line. Building permits, new home sales, and housing starts are the red lines. Look at where the NAHB's index is relative to actually the macroeconomic data. So I think home builders got way over their ski tips, and we're really starting to come in here. And we'll see whether or not we have confirmation of that with the S&P Case-Shiller index, the HPI, which is kind of a Fannie Freddie mortgage gauge, and then big report on Tuesday, the Conference Board's consumer confidence numbers. We got the Richmond Fed also on Tuesday. Wednesday, new home sales. Seeing a trend here? A lot of housing data. On Thursday, obviously, weekly unemployment claims, but durable goods orders. Remember, whenever you see the word core, it means X something, and in this case, it means X transports, right? X aircraft, autos, big stuff like that, okay? A lot of data out of Japan on Thursday. Thursday night, obviously, with the Asian Open. Could be interesting to see what happens over there, because we know that Abe and Bank of Japan Governor Kuroda have pledged, quote unquote, in their kamikaze mission, either succeed or die trying to get the Japanese economy going. And the Nikkei's really taken it on the chin lately. It's recovered a little bit of airspeed, but if this data disappoints and the Bank of Japan doesn't step in like our Fed or like our market believes, it'll be very ugly for the Nikkei. On Friday, we get preliminary GDP. I think this is way high. 2.6. I think we're going to see a 1 in front of this number. I think we see a 1.9 print. I think GDP just absolutely implodes. Chicago PMI, revised University of Michigan consumer sentiment, and pending home sales. We also have a slew of Fed folks speaking throughout the week. So that could be potentially market moving. But we know after they release their minutes, they all run out to a microphone to revise and extend the remarks, so to speak. But Friday night, very, very potentially next Monday, market moving information out of China with the manufacturing PMI. Remember, that's kind of what started this January freakout right here, was bad data in China followed by an emerging market sell-off. So anytime China sneezes, we have to pay attention because the world might catch a cold. Got 3 weekly options trades I'm working, Twitter, S&P 500, and Chipotle. Potential gain of about $7,000 on $15,000 of risk this week. Make sure you sign up. We have one more options weapons school, kind of part of our Sharpshooter series webinar. That's going to be tomorrow, Tuesday. So check your email and click on the link in there to register. We still have a couple slots left for options weapons school, which is going to start this Wednesday night. the training portion of it. And if you can't attend, don't worry about it. We record everything. So make sure you check your email for the registration link for tomorrow's Final Options Weapons School webinar. I believe it's at 1 p.m. Eastern. Okay, happy hunting. Make sure you hedge, and I'll see you for our live trading session tomorrow. We'll see you.